Hey guys, so the breakdown of Euro NZD bullish trade which I took today, Monday, did exactly 150 pips, risk reward of 1:3. My stop loss was 50. My TP was 150 pips. So I'll do a breakdown as usual. I trade using supply and demand. So if you're looking for a bullish trade, we are talking of demand zones. So in this case, I used the demand zone from the 4-hour time frame. So if you look on the H4 using the past market data, of course, as usual, whenever you're trading using supply and demand, you want to mark the trend direction. If it's an uptrend, you want to mark the higher highs, higher lows. If it's a downtrend, you want to mark the lower highs and the lower lows. So anytime that price trades back to this starting point of the impulse move, we consider that a demand zone. So we are anticipating that price will continue pushing higher anytime it comes here. But of course, we wait for confirmation. And just to show you an example, you see that if you use this demand zone at this point, price traded back to that point. I want you to see immediately price touches the demand zone. You see, we had this sort of reaction and we had a retracement. Now, this was not the main move because this was only but a retracement. But if you trade using demand, for example, if you got a trade somewhere on this demand zone, this trade retraced with over 230 pips, which is enough to give you a very good intraday signal. Anyway, I'll go to the demand zone that I used in this trade that we took. So at this point here, as I've said, at this low, first I'll start by removing this. Yeah. So you come and mark where the impulse move started and where we have our first bullish breakout candlestick. You could use this one or you could use the one above. I like to use the closest bullish candlestick. As long as it's a breakout candlestick, you drag to the right and you mark that as your demand zone. Now remember, I always look for entries on the 1 hour time frame. This higher time frame was just for helping me to identify the trend and to mark the demand zone. So not all demand zones will work. Again, I always repeat. So it's upon you to come and look at the demand zone that price will have a reaction. If price comes to this demand zone and it breaks out to the downside strongly, that becomes a fake signal, so you won't take the trade. But if price comes to the demand zone, then we have a very significant bullish confirmation, then you can take the trade. Now in this case, I want you to see price traded back to the demand zone. At this point, there was no significant bullish pattern. Price continued to drop down. Then we had some sort of bullish pattern here, and price started to buy. But this happened last week, I think, probably on Friday. So being Friday, I couldn't have taken the trade at this point. Also, I wasn't very certain of this trade. So whenever I'm not sure of a trade, I'm always patient enough to wait for further confirmation. As I always say, patience goes a long way if you want to find a very good trading setup. So I was patient, then we come to Monday. So Monday, the market price opened on Monday, and then we have price dropping. So I want you to notice a few things. Remember, we're looking for a confirmation pattern. Now, before we get the confirmation, we want to see how price will react at this point. So if you come and look at the demand zone, there is a very significant line of support that is evident at this point. I want you to see the number of times that price touched this support zone and it got rejected. It's actually numerous times. Like here alone, we have about 1, 2, 3, 4, 5 touches, or you can say we have 4 touches at this line. We have more touches here, more touches, and the significance is that when at all times when price touched this line, it got rejected. So we had rejections. So all these rejections are already giving me a very good sign that price is being rejected. Now, remember this is the demand zone. That is point number one. So being a demand zone, we are anticipating strong buyers. If we are anticipating strong buyers, we want the sellers to be weak. And for us to know whether the sellers are weak, we want to see how price will react. Now you can see sellers have been unable to break this zone more than 6, 7 times. That's a very good indication that sellers are actually weak. So after knowing that sellers are weak, we just want a confirmation that buyers will be strong in this market. Because just the fact that sellers are weak does not mean you should buy immediately because of the rejection. I always wait for a bullish confirmation, which is a bullish momentum pattern or candlestick. Now, if you watch carefully, we had this pattern here. Price dropped, it went back up, dropped further, it went back up. Now, this candlestick here is a bullish breakout candlestick, which is also an engulfing candlestick. And the bullish breakout candlestick, which is also an engulfing, signifies strong buyers, or rather strong bullish momentum, right? So after knowing that we have a W pattern, the concept is always the same. When we have the W pattern, you want to wait for price to come and retest the neckline, and that will be your entry point. So you come and mark your neckline. The importance of marking the neckline, I always tell you guys, it helps you to find a very good entry point. For example, by the time you have this bullish candlestick, this is already a confirmation. Now, someone might easily come and jump and buy here, but I prefer to wait for price to retrace, because if it retraces, my stop loss becomes at a more safe zone, and I can easily get a good reward on this trade, a good risk to reward. So wait for price to retrace, and in this case, price came and retraced with this candlestick. This was my candlestick for entry. So I had my entry point there. My stop loss on this trade was roughly about 50 pips. Then my take profit was 150 pips, doing a risk reward of 1:3. So once again, you can see the build up to the trade. There's a lot of things that I've looked at. I've identified the demand zone. I've come and watched to see how price reacted at the demand zone. If I didn't get any reaction here, I couldn't have taken any trade. So we got the support, very strong support, which was rejected multiple times. Price failed to break below the support. Then we come and have a W pattern, which is a significant bullish confirmation. When we have the W in this long breakout candlestick, wait for price to retrace, then get your entry at the retracement. So the thing with this strategy, as you can see, by the time I got into my trade, this candlestick was bearish and it dropped all the way to this point, if you can see. So you need to have a very good, I would like say you need to have a good trading psychology, so that by the time this candlestick is dropping, you are not so emotional and you decide to close your trade. So the reason why I'm not so much into my emotions whenever I'm trading is because I've done a lot of back test of my trading system, my trading style. You've been seeing me literally posting the same type of analysis every week, even once or twice. This is because I've tested it enough using the past market data. I've been trading it live for a long time, so I know that my system works. So even if this candlestick is very bearish at this point, I'm not easily swayed. I just put my position there. I place my buy position. Then you wait for the market to react. If price goes against you and it breaks out to the downside eventually, because sometimes you can hit stop loss, well and good. That doesn't mean your strategy does not work. But because I've backtested it, I already know that most of the time, as long as I'm following my strategy, I have a high probability of hitting profit. So basically, that is how I got my trade of Euro NZD 1:3 RR. Same trading style, supply and demand. I don't change how I trade. I have the same system that I follow. If there is no setup, I don't trade. And you can see by the time I'm getting a setup, it's taken me a very long time, because all the way from this point there was no setup. Price was just dropping. So it's taken me a very long time. Not actually very long, but a number of days, about 4 or 5 days, before I could find this setup. So basically, that is how you trade using demand and supply.